Geopolitical tensions involving Iran are back in focus. They are starting to impact global commodity markets. I am Mohammad Imran, research analyst with Mire Asset Sher Khan. Let's quickly understand what's happening and how it's affecting crude oil and metals. So what's the news? Protests in Iran have intensified, raising concerns around global political instability and potential supply disruptions. Because of this, risk premiums have increased, especially in crude oil markets. Iran is a key oil producer and has a strategic geographical location, commanding a major global shipping route. So development there have a direct effect on commodity prices due to supply chain disruption risk. Why does Iran matter for crude oil? Iran roughly produces around 3.3 million barrels of oil per day, making it far more important than Venezuela in global oil supplies. Iran exports roughly around 1.5 to 2 million barrels per day of oil, which means even a small disruption can move prices sharply. Global oil prices can swing by around $5 for every 1 million barrel of surplus or deficit. Currently, Iran commands a risk premium of $8 to $10 per barrel due to geopolitical uncertainty. Now, the Strait of Hormuz. The big risk point, Iran controls the Strait of Hormuz, one of the most critical global shipping routes. This route handles 25 to 30% of global seaborne crude oil exports, 20% of global LNG exports, and 23% of global aluminium exports. About 80 to 84% of oil transiting the strait is destined for Asian economies. Any disruption here amplifies supply risk not just for oil but also for metals. Impact on oil prices. In short term, we expect Brent prices could add up to another $3 to $5 per barrel, the prevailing risk. Overall, crude oil market is in surplus of 1.5 million barrel per day by end of 2025, which is keeping the overall outlook for Brent and WTI modestly negative. Now the impact on metal markets. Iran is also a major producer of lead and zinc. 4 lakh tons of annual capacity of refined zinc and 4,50,000 tons of refined lead output annually. Any prolonged disruption could dent global metal supply chains in short term. Aluminum prices have already jumped 15% in last 3 months. If instability escalates, aluminum prices could move up towards 3,400 per ton mark on LME. Zinc prices could rise short term, though long term outlook remains weak due to slowdown in China. So in summary, Iran remains a key geopolitical trigger for commodity markets. While risks are pushing short-term volatility, strong supply conditions are keeping prices for now. Markets will stay highly headline-driven from here on. Thank you for watching and stay tuned for more headlines.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.